Okay, here's the boring bit. Anything you hear or see in this video is not investment advice. It could be absolute rubbish. Please do your own research. Hi, I'm Justin Waite. I'm a small cap investor. Why? I hate it when people ask questions on your behalf, don't you? Anyway, I invest in small caps because the potential is very big, but also the risk is big. So you have to know what you're doing. By the way, I have a strategy, and if you want to check out the strategy, click on the I up there, okay? And that will show you my strategy video. But at the moment, I find the market's very hard. Let me know. If you are an investor, a seasoned investor, not new to the game, and you have a portfolio, of course, what percentage of cash are you holding in that portfolio at the moment? I'm 40%. That means I'm quite bearish. I'm risk off, really am. I find the markets very hard at the moment, and I find when the markets are like this, when in doubt, get out. And I don't mean I'm out. I haven't sold any shares. I've reduced my position in those shares, reduced the risk, of course, and I'll just sit and wait. Because I just think that, if you reduce the risk, obviously you reduce the potential reward. But I don't believe the reward's there at the moment. This market is churning, it's grinding sideways, and I'm not convinced. And yes, the companies I hold have massive potential, I believe. I'll cover a few of them in a bit. But the market will drag them down, So where I don't want to be is this market to drag my stocks down further and me have no cash to top up, to increase that potential reward and the risk there. So when the risk comes back on, when I see the markets making a good move, or some of the stocks I see making a positive proper move, breaking out of their ranges, I'll, scale in. There's always more time, patience, is a thing we have to do. Sometimes you have to sit and wait and do nothing. That's very hard. People say, just do nothing. Like it's easy. It's not easy. It's very hard for a human to do nothing. Do you understand? There are about 100 billion neurons in our brain firing off 50 messages per second. Between 5 and 50 messages per second. 100 billion of them. So you imagine that activity going on in your brain. It's very hard. In fact, that's the opposite thing to what you want to do. Sit and do nothing. But do you know what? You have to sometimes. You have to have that discipline to do nothing. And that will, and if we can conquer that, some quality, that asset, that discipline to nothing. If we can conquer that, all right, we'll do very well as investors. And I think generally in life, if you can conquer discipline, it's a very hard thing to do. Okay, let's talk about some news on stocks. So I'm going to start off with Argo Mining, ARB, blockchain mining, because it's a Bitcoin miner, and they had their interim results out 6 months. A significant maiden profit on stellar revenue growth just 12 months after it joined the London Stock Exchange as a startup venture. That is good. How many companies do you know right now? How long have they been on the market? See these people. You have to look at two things: value generation. Okay, you can have a news event that'll seemingly generate value for the company further down the line. But when a company is losing money, it's not generating value; it's destroying it. When it has to raise money, it's diluting shareholders. So look at companies. That's why this time, in fact, last year is now. Time's flown. I got out of all sort of non-revenue oil and gas resource stocks because I saw global growth slowing down. They're destroying value. Yes, there'll be some up. If some of these companies are sold off, of course they'll rally. But I only want to now invest in companies that are generating value. And this is a company, I believe, doing that within 6 months, or within 12 months, already made a profit. How many companies do you know haven't even turned over any revenue, and they've been on the stock market for years? Financial highlights. Revenue increased by 283%. Yes, it's from a small base, but 2.93 million, sorry. Up from 0.76. Operating profit, just under $1 million. 4.1 million loss. Maiden profit there. So that's very impressive. So post-period developments, I quite like this. A new power supply agreement with GPU1 to increase access to clean energy by 357% from 40 megawatts. Listen, additional 50 megawatts of power will allow the company to run up to 15,000 more mining machines. This is, and I get into the numbers here concurrently. Taking total Bitcoin mining capacity from 505 petahash at the end of 2019, as announced July 4th, to 1.36 exahash, which would currently make Argo the largest publicly listed crypto miner in the world. A new agreement will be entirely funded out of the crypto mining proceeds from Argo's. I like that, see? So they're generating cash. They don't need to go to the market to raise money to do this. They're doing that. Outlook, current trading is progressing well as Bitcoin prices remain firm. And we continue to enjoy strong momentum from rapid expansion of our mining capacity. So our 2019 results are expected to reflect a full 6 months contribution from our existing mining platform, as well as from the positive impact of further increases in installed capacity to approximately 12,000 machines by the end of the year. So our drive to establish Argo as the world's largest public miner by next year. The board looks to the future with great confidence. This is very good. And I'll show you a chart now why this is very good. But just lots of things in play here that make it very good. Let's have a look at the profit here then. So I looked at this. Look at that. The gross margin here, 54%. That's cracking. Net margin is 32%. That is cracking. And let's be honest, this is when the price of Bitcoin, the majority of this period, Bitcoin was between $3,000 and $8,000 per Bitcoin. It's now above 10,000. So it's only the last month or so they've been really profitable. So, and Bitcoin's been up here now for 3 months pretty much, above 10,000. So good margins. They have cash of 5.6 million. Net assets are 22 million. They're only valued at 27 million. And they are generating decent profit. I think, I genuinely think people are behind the curve on this. So, look at the net cash inflow, 8 or nearly 9 million. This is the cash flow statement. Purchase of assets there. So they purchased 18 million worth of assets. And they're still making a profit here. Cash at the end of the period, 5.6 million. They also released news. New mining hardware is installed. So they've announced that these 1,000 new Antminer T17 Bitcoin mining machines. Total number now of production has increased from 5,000. So they've increased the machines. The price of Bitcoin has gone up as well. The company expects to increase total base remainder of the year. Additional 6,000 machines are on order and expect to be installed over the next 2 quarters. So they've got to 12,000. The company plans to provide a third quarter operational update early October. Really looking forward to that. It'll give us a bit of clarity, a bit of transparency on, sort of longer term here over several months. We've had a 1 July update. So I want to show you a chart. It's very telling. All right, it's a bit complex when you first look at it. I'll talk you through it. So the black line on the left there, that's the start of the year, 2019. Okay, look at the price of Bitcoin. This is the chart of Bitcoin. So pretty much from February, March, April, it was below 5,000, below 4,000, 4,000 Bitcoin. So they made a maiden profit whilst Bitcoin's been in this range. For 4 months, it was below 8,000. Total mining machines by the end of June was 5,000. The black line there is, of course, is this period H1. They will have 12,000 by the end of the year. So look at this. In June, they did 1.4 million in assets mined. July, 1.36. But they've just hit 6,000 machines now. And the Bitcoin price, look, it's stabilizing above 10,000. This is very good. This is my take on this. At a conservative estimate, right, with 6,000 machines, with 5,000 machines, I think they're making clear profit. This is pre-tax profit, okay, about $500,000 a month. That is 6 million a year if you pro forma that. Put that on 10 P of 10. That's 60 million market cap. That's more than double they are now. But if you are the largest crypto miner in the world, you should be on a PE of more than 10. Huh? So I'm going to say 20. So I'm saying if they do, about $500,000 a month, they should be worth 120 million market cap. That's with 5,000 machines. They now already got to 6,000. And year end, 12,000. So you can more than double that. This is as long as, listen, I've chatted to Mike on the phone twice. I want to get him on the podcast. I'm trying to get him on. He said, no, to be honest, I'm not a big fan of publicity. I don't like it too much. I like to just do the thing with the business. Hopefully the business will speak. He's done a couple of things, but I'm trying to get him on. But he said, listen, there's 3 things that affect this company, essentially. One is the efficiency of the machines. Okay, they have the most efficient machines. He said, that's why our costs are lower than anything else. Because the machines we're buying are more efficient than anywhere else. And we're going to keep buying more efficient machines. And so it's hard to extrapolate a number based on previous numbers, because they've got machines coming in now that are a lot more efficient, and they get rid of the old ones. And the old ones are still assets. Some people will buy the old ones. They're not dead. So he said, So essentially, as long as Bitcoin stays where it is, our margin will get better and better. Okay, so that's one thing. So the second thing is electricity. But they've got an electricity deal now. It's very cheap. It works for them, and the machines are very efficient. So there's two things he said it can control. There's only one thing I can't control, and that's the price of Bitcoin. It's at the moment it's stabilising, looking very good. And do you know what? It doesn't have to go higher. They've got a cracking margin. They've got 80% margin on mining here, and their machines are getting more efficient. Yeah. So as long as Bitcoin stays where it is, it's fine. If it goes higher, fine. Trouble is, if it goes higher, it attracts more miners. And then when more people mine, it gets harder to get your rewards. You know, so it doesn't matter if it goes up. But it comes down a little, it doesn't matter. Their margins are better than someone else. So I'd say, they can do, as long as the Bitcoin margin, Bitcoin is between 8 and 11,000, they're laughing. They really are laughing, especially as they power up. And they've got cash, they're generating cash. So it's self-fueling. They're generating cash. They can buy more. They can afford to buy more efficient machines. Those efficient machines make the margin better, generate more cash, buy more efficient machines. So if you are the lead dog and you get that lead out there, becoming the most efficient, it's hard to catch you, And that's, if you're the lowest cost producer, it's the same with gold mining essentially. If you're the lowest cost producer, it doesn't matter if the gold takes a dip. You can keep mining profitably and other miners will be taken out. Eventually, the price will go back up because there's no demand. There's lack of supply. And with Bitcoin, of course, there has to be a new block created every 10 seconds. So if the Bitcoin price goes down, then they'll be getting more rewards if they're mining at the rate they're mining now, because it becomes easy to mine. So I just see this as a very positive story. One for your watch list. Like I say, I see Bitcoin long term doing a lot better. If you look at what's called a halving next year, where the amount of Bitcoin you're rewarded for doing this mining halves. If you look at the history of this halving, Bitcoin prices rallied pretty much a month afterwards. And so I think Bitcoin price is going up. It's also anti-inflationary, whereas every other country in the world pretty much is printing money, devaluing their currency by lowering their interest rates. Bitcoin is hardwired to be anti-inflationary. It's a finite supply, and it gets harder to mine. So 16.8 million Bitcoins to be mined, only 21 million is going to be in existence. It's becoming a safe haven asset. I like gold. All right, so I don't know if you saw that. There's a correlation between gold and the correlation between Bitcoin and gold has trebled recently. So basically, whenever gold's gone up, Bitcoin's gone with it. So I like it. One for your watch list. Okay, next bit of news. Safestay. Okay, good bit of news out there. 15th hostel. This is good. They're doing what they say on the tin. I hate that phrase. Sorry, I do apologise. But they've agreed to acquire its freehold of its 15th hostel, currently operating as Best Western Glasgow City Hostel for 3.15 million. Completion maximum October. Part of the group's strategy is a pan-European network of premium hostels in leading cities, located in Elmbank Street, in the heart of the city. Hotel is short walk from Charing Cross. But as with the acquisition of other hostels, Safer, the company intends to convert this site into a hostel. An outline planning permission already exists for conversion into 200-bed hostels. So they'll be earning money anyway as a hotel. They'll still do that, and they'll start converting it. So it'll add to their top line and to their bottom line. But pretty much, I think revenue is pretty much like £1 million per hostel. So they're going to be turning over 15 million full year. Should be about 7 million half year, 6.5, 7 million half year, or 7.5 million. Interim is coming up very soon, but I'm very pleased with this. So summary here, they now have 5 sites in the UK, Glasgow, Edinburgh, York, 2 in London, 10 sites in Europe, Brussels, Lisbon, Madrid, Paris, under construction again. It'd be interesting to see when that comes online in Paris, because once that's finished, it's a big hostel. It'll add a lot to the top line. Pisa, Prague, Vienna, approximately 3,500 beds across 15 hostels. Like I said, cash generating. Okay, profitable business. They have cash. They've got a map to 20 hostels. Nuno Sacramento is a cracking name, that. Nuno Sacramento! Ladies and gentlemen, please welcome Nuno Sacramento! But Nuno came on the podcast and he did say they're still confident of hitting 20 hostels by June next year. I think they're going to acquire a group or something, because at the moment they're also driving hard bargains, because you can just buy hostels if you offer the right price. But they're obviously negotiating, and that's a very important thing. They have to negotiate and get the right price. Otherwise, they walk away. So then they're going to 40. They reckon the move from 20 hostels to 40 will be a lot faster. They'll be generating a lot more cash. They'll be able to do faster deals. Last bit of news, Xeros Technology. I love the tech here, okay? The interim results, they're burning cash like a mopo. But it's coming down. So these are the highlights from the interim results. And look at this, look at this. This tech is worth a lot of money. It's worth a lot. Major commercialization progress at platform. License contract execution with India's largest domestic washing machine manufacturer. Joint development agreement in progress with largest Chinese domestic washing machine. See, largest in India, largest in China. These are the most populous countries in the world. 1.3, 1.5 billion of people. They're going for the big targets first. Commercial washing machine licenses contracts executed with India and China's largest commercial laundry equipment manufacturer. So in both those countries, well. Extra commercial washing machine installed in Shanghai. First endorsement of Xeros Clean Technologies by garment manufacturer in the US. Joint development agreement in progress with world's largest apparel manufacturer. Again, these are massive claims to fame. Massive. And binding heads of terms signed with development licenses by the largest garment finishing equipment company in South Asia. It doesn't get better than that. As far as hookups and contracts are concerned, it does not get better than that. You cannot do better than that. The largest companies in the largest countries in the world. They got stuck there. Largest companies, largest countries, as far as population is concerned. And these countries, the trend is on their side. Water. It's a scarce resource, especially in these countries. It's getting worse. It's on their side. The tech, they're in the right place, right time. Mega trend. Okay, this is the scary part. This is the revenue sheet here, the income sheet here. The turnover 1.5, which is down from 1.8, which is not a bad thing because they had to have hardware washing machines. Like I said, they were in the businesses themselves. They entered the market in businesses like Hydrofinity, and now they're scaling out those businesses and going to the license model. So the revenue will come down. The margins will be bigger. They'll be more profitable. So 1.8 to 1.5. And you can see there, cost of sales came down a little bit there. Administrative expenses came down quite a big chunk there from 12 to 8.9. About 13 to 9, really. Loss before tax, 9 million is 12 before. Loss after tax, 912. So it's come down. Inventories, this is quite good, look. The inventories are selling down the inventories because they don't need to hold all this hardware, the washing machines and that stuff. So it's massively come down from 6.2 million to 8.9. Cash and equivalents, 6.4 million at the end of the year. Net assets, 11.1 million. That's all the things. So 28% reduction here, loss before tax in the net cash flow. So let's, I want to extrapolate this, okay? And someone sent me an email, Charles actually, thank you for email. And he was being very conservative on figures in India. And he was saying, like, I see revenue there on their deals by 180 million for a year. And I said, well, listen, take 1% of that. Or take 10% of that. He was looking on a 10% figure of the entire, of quite a conservative figure. He was looking at 10% of a conservative figure. And I said, well, use 1%, 18 million. They turn over 18 million in India. It's going to be good news. When you realise you've got quite a few contracts in India and in China and elsewhere, that'd be amazing news. But they're still burning cash. It's how fast this cash burn goes down and how much they can ramp up the revenue. So let's have a look at this. How long to cash generation? And that's the point. Will they be generating value or destroying it? So cash burn over the last 6 months was 9.2 million, an average of 1.53 per month. This was reduced by 28% from the previous 12 months. So if they reduce this again by 30%, let's say, this would be 6.4 million, or just over 1 million per month for H2. All right, for H2. With group cash of 5.2, they mentioned this at the 31st of July 2009. This will last till December, assuming revenue doesn't increase massively. So at current cash burn, of course, they've got to December to do a placing. And that's the thing. They mentioned the placing is hanging over their head. If they reduce this cash burn again for H1 2020, this would be 4.1. So they need approximately 5 million, approximately 6 months, depending on the revenue pickup. So I'd say, to be safe, they probably need 10 million taken through 2020. And maybe then, depending on the revenue creation, would depend whether they can see through the cash generation, But again, we're at an inflection point here, but we're still at high cash burn level, still a lot. So what I'm saying is, in summary, they need probably 5 million every 6 months, okay? That'll take through to summer next year. 10 million take through the 2020. They probably could then be self-sustaining. That's a guess. Let's see what Mark says, CEO. I respect the guy whose deal he's doing, but Mark, if you're this bullish, buy some stock. Since Xeros' inception, the geopolitical and environmental pressures on the world supply on water continue to increase year on year. There is no reason to believe this will change or abate. Our technologies help to extend this precious resource while simultaneously reducing significantly pollution. Agreed. After a number of years of development, manufacturers and consumers have now recognized that our innovative technologies are highly valuable, both in terms of their sustainability and cost benefits. The commercialization of our products is now accelerating. Good. With a number of contracts in execution and in development in a number of countries, including two of the most populous. In 2017, we changed our status to commercialise our technologies under a licensing model in order to achieve the broadest possible market penetration from the lowest possible cost base. Our licensing contract wins and reducing cash burn rate are evidence that we're now making good progress to achieving that objective. But we'll still need to raise cash, and I'm going to put lots of money into the fundraise. That's what I'd like him to say. Oh, yeah. What do you make me go there? This is a fabulous company, a pioneering company with cutting-edge tech that I believe will be worth millions. That is why I'm putting my entire year's salary into the fundraise, and hopefully others will join me. I believe in this company. I'm putting my money where my mouth is. Signed off, Mark. That would be perfect, Mark. Absolutely perfect. Go on, do it. If anyone knows Mark, or anyone knows someone who knows Mark, or if you know someone who knows 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 Mark, just forward them there. Mark, lead with a fundraise. Saying, listen, guys, when you walk into, if you do your investor roadshow, Mark, okay, you walk into those institutional investors, if you are doing a roadshow, and you say, I'm chucking a year of my wage into this because I believe in it. No, I'm not just foregoing my wage. I'm chucking a year in. I'm going to get 300 grand from my bank account and I'm remortgage the house and I chuck it in. That's how confident I am about the tech of this company. That would raise money, I believe. Okay, here's the companies I've mentioned, the performance since we're covering the charts. Bidstack, taking a bit of a knock this week, Bidstack. It'll come back. Nuformix, 121, another knock this week. It'll come back. Argo Blockchain, I think it's undervalued. If we stay around this level, blockchain mining, they're getting more efficient, more machines coming on. I think, 12 months, a maiden profit listed. How many small cap companies do that in tech? Agronomics. In tech, how many companies do you know that? Come to market within 12 months, they're making a profit. None. The answer to that is none. There are no companies I know that make a post-tax profit within 12 months, a tech company. They've also changed their model. They realised the original model, which was basically allowing retailers to surf or sort of mine, using their machines. So in the cloud, basically. So you take a contract, subscribe, and you could be a miner via their cloud. It wasn't working, so they swapped, they pivoted straight away. And it's working straight away. So they listed for 12 months. But it's only since the start of the year, or towards, after the first quarter, they switched to doing blockchain mining on their own account only. And it worked. This company is going far. The only thing that Mike said he can't control is the Bitcoin price. But do you know what? It's hardwired to go higher, I believe. Education, again, I think people underestimate the growth potential here. It's growing. Online education is growing. Integumen, again, I said what I said, I want to say again, I want to see more contracts come through at the moment. I think it's priced in. The potential is priced in, I think. But I like Jay, I like the team, I like the space they're in. But if they get one of those 7-figure contracts, good. It's excellent, but, hopefully it can happen. They're in a good space. There's a lot of potential there. But I think I don't think it'll move for a while until one of those big contracts are landed. Open Orphan, again, I like it. The data platform I'm very excited about there, to be honest. The current business is very good. It's cost plus, so we're making money in that. But where the potential, the blue sky opportunity is, that's those data platforms they got. Polarean, again, it's got to go higher. It really has. We've got a big seller in there. Take advantage of that because a big seller's got to sell. AMP has to sell, otherwise they're out of business. They don't want to sell. They got a loan, so their biggest shareholder has to sell as well. And we know by the end of this month, there'll be some decent news out from Polarean, at least on enrollment. Power Energy, and we'll sell that by the end of this month. If there's no news out, I'm selling it. Immotion, it's taking a bit of a knock, you know, but I do like the guys in the business there. I think you know, they can be generating money. They've done their last fundraise, and now they're generating value, I believe. Itaconix, down 15%, as I mentioned them. Safestay down 20%. I did buy a little more Safestay. Yes, I did. And Xeros Technologies down 35. I'm not buying any more of that until the fundraiser is out the way. And then it's going to be a while till it generates cash. Plenty of time. Plenty of time. That's the lesson in this video. Plenty of time. Businesses, proper businesses, I mean, take a long time to start going from loss making to generating, you know, value via cash generation. There's plenty of time to scale in on the way up. This is my portfolio performance last 3 months, down again. I've never had this for a long time, down 1% over 3 months. Last 3 months, I've not had a big winner. I've really not. And it's starting to pressure me. I feel the pressure a little bit. But I can't just go for big winners because I believe I have to have a big winner. I have to believe in it. I have to have the confidence to go big in a company, you know. At the moment in these markets, I'm not. I'm in doubt, so I'm scaling out. Well, I've scaled out. I'm pretty much happy where I am now. Last 9 months, 91%. Last 12 months, 77%. I don't understand how that works. And I do, because it dipped me. Yeah. And last 18 months, 2 years, that's 346%. Okay, do me a favour. Comment below. How much cash do you have in your portfolio, percentage-wise? Are you quite bearish? Let me know. And what percentage are you? No cash? 5%? More than that? More than 10%? More than 15%? I don't have to keep doing this as examples. You understand what I mean? And listen, do me a favour. Hit the subscribe there and notification bell. Don't forget the notification bell and some other videos right there you like. Please share this if you like it, and I'll catch up with a new video next week. Cheers. Subscribe.